Morning folks, I want to go through a few commodities in this video and nothing else. So we'll start with natural gas. Here's the daily chart on the Black Bull broker. We went long on this above $3.10 and around about $3. So average price on this is about $3.10. You can see on this day chart we had a good rally on Monday after a small weekend gap, and then yesterday we just dropped back down a bit, and then today we're just rallying up a wee bit more. Let's have a look at the 4-hour chart. And you can see how this looks. It's interesting that we dropped down to the top of this weekend rollover gap, but we didn't fill the gap, and we've just bounced off there today. So our average position is $3.10. We're aiming for a move back up to the top of this channel, really, and that would take us up above $3.50, maybe $3.60, maybe $3.70. And so far, we're just waiting to see what happens. We've got 3 moving averages and some resistance above us, which we've got to get through. You can see the 200 in purple, the 50 in red, and the black one is the 100-period SMA on this 4-hour chart. So we've got a few moving averages, and the 20 actually, which we're just still below. That's this green one here. And on the day chart, we're still trapped between the 50-period moving average, this red one, and the 20-period moving average, the green one, and we're right in the middle in between the two. So that's our position on natural gas. There is talk of colder weather coming, which may boost this price. If we get to 285, I'll be looking to add my last tranche of long positions on this, and I'll hedge the entire position in the mid-170s should we get there. WTI oil, well, we went long at $78 and we took profit yesterday at $79.50. I don't really know how this is going to go. I think we were actually lucky to get a bounce here, and we've just moved above that 200-period moving average on this day chart. But still, it doesn't look convincing to me. If we go down to the 4-hour chart, we can see that we've got a sort of a weak, insipid rally. And then yesterday, we had this reversal candle. This is a dark cloud cover candle on the 4-hour, which is not good if you're bullish on this. So I think this could well be a reversal candle, a little wick high with the dark cloud cover candle, and we're probably going to fall back down again on WTI. I have no positions on WTI at the moment. Perhaps we'll look to buy much deeper dips or sell back into rallies again. Now, this is sugar. I've been saying I haven't been trading this futures position on sugar because of the size of the contract. You can see I actually sold last night, actually where we are at the moment at 27.10. And just the spread on that position is $17 on this very small account. So I'm really taking quite a risk on this. So even though this trade actually represents what's going on my bigger accounts with sugar futures and my shorts, it's actually way too big for this little account. But let's wait and see what happens. It's not that important. I'm trying to illustrate my positions here. The other trade that I'm looking to initiate today is London cocoa futures. You can see why on this chart. And I've chosen this one rather than the US cocoa futures. Let's just have a look at how that looks. And it's simply because the size of the contracts in the London futures allow me to get into this position on this account. And also, now that I've switched across to the US cocoa futures, you can see we've had a much bigger move down, and the London price is actually lagging a little bit. But I think overall now we've probably broken the back of the cocoa market. We dropped down below 4,000 on the US cocoa futures, and I'm looking for this sort of path to play out. And if we go to the London cocoa futures, which is a pretty similar pattern in a very beautiful, neat channel, let's go back to there. And you can see it's not dissimilar at all, apart from this one occasion when we blew out through the top, actually 2 occasions through the top of this channel. But since July, we've been trading back within this channel again. We did spike up through it, and I always love these fake channel breakouts. We broke up through it, spike high, bearish engulfing candle, beautiful setup after having cleaned out some of those stop losses just above the channel, and I think we could now move down towards the bottom of the channel and then continue further. So that's London cocoa futures. I'm looking to take a position on that today. Whilst we're on this page, just have a look at the US 10-year yield. This is interesting as well for those of you who are trading currencies and stocks and gold and that sort of thing. You can see we've actually broken down through this very, very, very long-term trend line. It actually goes back all the way to 2020, and even though we've broken out of it a few times, we've been trading within it quite beautifully up until now. You can see we've got this sort of weakening pattern, a big rush up, spiky, volatile move, and then this sort of move up, sort of exponential type curve. And then the sequential collapses through various support levels. First of all, that red line there, we did have a hint of a turnaround at that double top. We broke and closed beneath there, the 20-period moving average, then the 50, and now the channel bottom and this previous horizontal support level, which means dollar down and probably a lot of commodities up, like gold and silver, platinum, and maybe oil and natural gas too. So talking about metals, we're in 3 trades on this page, and here we've got gold, silver, copper, platinum. I don't have palladium on here. That's fallen through the floor as I thought it might. And then UEC and URA, both uranium-related instruments. But let's have a look at gold to start with, and I'll just touch on copper shortly as well. So we're long from 1,937 or 36 on gold, The current price is 1,970 now. And this is just a beautiful breakout of the channel, a return to support at these moving averages. I pointed this out many times before, that we might have to correct into this cluster, conglomeration of moving averages, confluence if you want to call it that, and we bounce off there quite beautifully. On the 4-hour chart, we've also bounced off the 200 period moving average, this purple line down here, and we've formed these two impulse drives higher, and we've now above the 50 period moving average but below the 100. So we want this to continue, and I expect that gold will move up back to 2,000 and eventually test the all-time high at 2070, 2072, and then push on through there, maybe up to 2150, 2250, maybe 2350 in the coming months. We'll keep a very close eye on that instrument, not only because we're in it, but because it's an interesting trade as well. And then we're short UEC and long URA. I don't want to go into those in too much detail. I've covered these in previous videos. But what we did do today was we took some profit off URA at 27.80-ish. We got into this trade at $25, so we got out at $27.80. We're holding 50% of this position for a move back up to the channel top, then a break up through there, through 30, the big round number, and then heading up towards the mid-30s and then high 30s. This trade is somewhat hedged by a short UEC position. It's a much smaller position, and it hasn't really moved very much from our entry. So at some stage, I'll have to decide what to do with both of these positions, but for now, we're short on one and long on the other, and it's worked out pretty well. I have a subscriber here on YouTube that asks me about copper all the time, so let's have a look at copper. If you remember, I pointed out this spike low against the Fibonacci support level going back into, well, the middle of October, really, almost a month ago. And we've just edged up from there, not convincingly. I see, however, that iron is moving up, and there is some hope that there's going to be some economic stimulus going on in the US and also in China. So there's some optimism in the metals market from a building, construction, development point of view, economic growth point of view. And we've seen copper actually being buoyed up, now looking like a double bottom against that Fibonacci support level. However, I do think that there is still a big danger of economic slowdown coming up in the near future, and that things like copper and iron and maybe even silver will be negatively affected by developments in economic weakness. So I'm not really interested in trading copper at this level. I'd like us to get down to perhaps $3, maybe $2.50, $2.70. I'd then consider buying copper, or maybe a big rally for us to sell into. But at the moment, I think we're sort of right in the middle. And if you eyeball this chart, really, you can see we've had a big move up, sideways consolidation, double top, move down. And really, we're just consolidating in quite a narrow range, right in the middle of a broader range. And it doesn't really excite me all that much. And then the final thing I'm going to quickly point out, although it's not part of the commodities, but it won't take me more than 30 seconds, is the currencies. And our longs on the euro and the pound paid off yesterday. We took profit on both of those, pretty good profits, I think about 200 pips each. And then the dollar yen moved down about 200 pips. So we're nicely in those positions on dollar yen. We've taken quite a lot of short positions right up at the top here, above 150, 150. And we're now into some of the other short positions that we took earlier on, and all moving into profit now. So that was pretty good. We don't have positions on Aussie or the Swiss. But there's the chart I put up on DXY in my last video, and I said we'd either get a move up to underneath that red line there, or we'd get a move directly down. And as it turns out, the path directly down is the one that played out. Not quite as wide as the one that I drew. Actually, it just went straight down on the day. But we didn't need to get that rally up. We just fell straight down. We've broken beneath the support. And any pullbacks on this would be a good opportunity to sell. We're not trading the dollar index, but any pullbacks on the euro and the pound will be good opportunities to buy. Look for Fibonacci retracements, pullbacks to the moving averages, previous horizontal support and resistance levels. For example, there's one on the pound there around about 1.2420, and then any rallies in the dollar yen would be good opportunities to sell, even though we are pretty full up on our positions right there at the moment, so we probably won't be adding any. Well, I hope you enjoyed that sort of focus on commodities, and good luck with your trading today. So we're in a few, and we're looking to get into London cocoa futures. Won't be trading the US cocoa futures. And we've got our gold position on. We won't be taking any other metal trades apart from the uranium trades that we're in. And we're looking to buy pullbacks on the euro and the pound, and we're looking to hold on to our short positions on dollar yen. Have a great trading day. I'd appreciate your thumbs up and subscribe if you haven't, and I'll see you in the next video.